Hi, this is Ian Coleman from PIA First. This is this week's video analysis for the dollar index and the FX majors going into the week 29th of October 2018. If I do cough and splutter through this video report, I do apologise. I've just got a bit of a cold at the moment. So basically, I feel like we've been trying to chase the dollar turn, and I'm going to explain why we've been looking at the dollar to move to the downside, and in fact we got stopped out on our sterling dollar long trade last week. So if we focus firstly on the dollar index, we've got a 5-wave Elliott wave pattern to the upside, which completed near 97 the figure. Now that should dictate that we then get a choppy, volatile correction to the downside, normally in an AB CD pattern. And these inside legs, they're normally made up of 3 or 5 waves, so they're quite hard to analyze and to actually forecast. If we look here, we can see 1, 2, 3, that inside leg, and then 1, 2, 3, again the inside leg to the upside. Potentials also of a double top formation around about 97 the figure, and we've got a bearish engulfing candle from Friday, which sometimes highlights the top of the trend. So we're looking for that leg now to the downside, that bearish leg in the dollar index, and we're going to reflect that back onto our FX majors. And it's quite interesting because a few of these FX majors have highlighted patterns that do look like they are also looking to turn, and we're going to explain and show you what we're seeing this week. So let's go to euro dollar to start with. Excuse me. Here is the wave pattern for the daily chart, basically reflecting the opposite view of the dollar index. So again, we've got these choppy 3-wave patterns inside, and we're looking for that now to be complete. We've got a bullish engulfing candle on Friday, which is obviously opposite to what we saw in the dollar index. Now, what's most interesting here is the AB equals CD formation. So this is the AB leg. If we then project it over, and it's an exact count, then we've got the CD leg to the upside. Now the most important factor here, as far as I'm concerned, is that the projection is around about 118.50. Now we've got our bespoke resistance at 118.57. And that's really important for me because that basically gives me a good target level before bears re-emerge. So we're looking for this impulse leg to the upside that's not only going to be an ABCD corrective formation target, but it's also our bespoke resistance. If we go to shorter time frames, we're just going to look at this 3-hour chart. We've broken what could easily be seen. Let's get that trend line. As a wedge formation to the upside. The projected move, for the wedge. So the first target area we're really looking at is around about 115.50. I would express a word of caution just going into Monday. We've got some bespoke resistance at 114.08. It has held. If we just clear all of these off, we just look at a slightly shorter time frame. Okay, we could form a bullish reverse head and shoulders early on Friday. So this being a left shoulder, this then forming the neckline, head, neckline again, down in right shoulder, and then a break to the upside. Fibonacci retracement tool notes a 78.6% down here. So basically what I'm saying is that the outlook is bullish, but I think we've definitely got scope for buying into dips early on Monday. Sterling dollar, this time frame I think is very important. We've got the completion of a Elliott wave 5-wave pattern, 1, 2, correction in free fall, close to the 61.8% extension level, and then down to 261.8%. Really needs to be confirmed with a break of 129.11. However, we've also got this. This is a symmetrical pattern. It looks like a bullish Gartley. So we've basically got a 127.2% extension and a 78.6% pullback level. This is a confluence area. We have seen dip buying around there. So this is quite a strong bullish formation for sterling dollar. If we go to here, we're looking at this AB CD formation target, which is around about 134, the figure. So again, we're bullish. The scope for a mild correction in early trading on Monday, but that's all we think it's going to be. Dollar Swiss, and here we've got a reverse count, 5 waves to the downside, and then a very impulsive move to the upside. Levels around about the one big figure have found sellers. We've got a bearish engulfing candle from Friday, obviously mirroring what happened in the dollar index. We've also got another indicator, if you like, which highlights the end of a trend, and that's called a DMARC 13 count, and that's on the daily chart. So we are looking still for a move to the downside in the dollar index. We've got a previous swing low around about here, and we've got bespoke support at 98.57, so that's going to be our first target area. We could then see a bounce and a period of consolidation as perhaps we form a topping formation, a head and shoulders, but at the moment our focus here is around about 98.60. Now, dollar yen, we are short. We had an evening doji star pattern posted on the weekly chart. We've got reverse trendline support coming in around about 110.36. What I don't like, I'm going to highlight it here, is this time frame. So we've got the impulse move to the downside, 5 waves. We then moved higher, but we only made, we only got to 38.2% pullback level for the correction. Now, first wave corrections are normally stronger than that, and we're also, that dip buying on Friday below the previous low has formed some bullish divergence on this 4-hour chart. So I'm still skeptical, if you like, of follow-through price action in dollar yen, and I'd really only prefer to sell into higher levels in this pair going into next week. Dollar CAD, this is one that I particularly like to the downside, and we're going to try and get short early next week. We've got this wedge formation. We have seen sort of 4 weeks of net gains. However, an indecisive doji candle. We had the Bank of Canada last week. Indecisive doji candle, which highlights indecision. We've got reverse trendline resistance at 132.22. But I think this time frame is really important. We've got a bearish engulfing candle, which is stronger than which is actually a bearish engulfing outside candle. So it takes out 1, 2, 3 previous 4 hours or 12 hours worth of price action, and it shows you how strong that impulsive move to the downside is. Now, this still looks like an ending wedge pattern, a break of 130.14, and the measure move target is 127.82. Now, the reason why I really like this setup is because these Fibonacci levels are really lining up quite well with all these supports. So we've got wave 1 from Friday, and then this correction to the upside. That Marabuzo level from that 4-hour candle is coming in around about 130.116. Now, if we look across, we can see that that area was previous resistance, so it's going to offer resistance again to the upside, and would be a nice short trade when we're looking at a risk reward profile for dollar CAD. So the 161.8% extension is at 130.13. We've got the trendline support at 130.14. So again, Nice confluence area, perhaps as a corrective bounce again to get short. 261.8 at 129.22. Let's swing it to the left hand side again, an area of support, so perhaps a mild bounce there. But then the most important factor is this area, which is the wedge target, is a 423.6% extension. Commodity currencies have a tendency to extend to the 423.6% extension. So this whole pattern, if you like, combined with these Fibonacci levels, looks really promising for a move, and quite an impulsive move, I think it will probably be, to the downside, and that's going to be at least my main focus going into next week. Aussie dollar, we tried to get long at 70.20, both on our medium-term call and intraday call on Friday. We made a 70.21 low, so we managed to miss that one. We have seen a bullish outside day posted, often indicates the end of a trend. We've got bullish divergence, so the RSI is making higher lows, chart makes lower lows, again often an indication that the downside is coming to an end. Bespoke resistance 71.87, we've got a 61.8% pullback level, 72.02. So focusing on this area this week. What I will say is I think the scope, let's just remove all drawing tools on there, and if we go to a shorter time frame, I think the scope for buying on dips, only because we've got some bespoke resistance coming in at 71.04. If we look at a reverse head and shoulders pattern, so we come down, this being our left shoulder, this being our, and then like this, and then move to the upside. So left shoulder, neckline, potentially, come down to previous support. Marabuzo support will be around about 70.50. Previous support is around about 70.57. So nice sort of area of decent area to get long at the beginning of next week if we see that dip, and then obviously a move or a projected move to the upside towards 71.90. Euro sterling, again some quite interesting levels here. We've got a channel breakout, reverse trend line, resistance at 89.05. If we look here, I'm just hover over the candle, look to our top left hand side, we can see that the high trade from Friday is 88.96, so pretty close to that reverse trend line resistance. If we look to here, we've got a channel top. Now, even if this isn't a change of trend, we should at least get a correction to the downside, because if this is an impulse wave, 1, 2, 3, then 161.8% should at least see a correction lower. So again, you might get some consolidation around about 88.62, but the immediate bias is to the downside, either in a correction or in the next impulsive move to the downside off that trendline resistance. Euro yen, and this is our last one that we're going to look at. We've got a hammer, inverted hammer formation off the daily chart. We've also got a symmetrical pattern, so we've got a 127.2% extension, or just extended through 127.2, and then 78.6% pullback, again just extended through to 79. Looking like a symmetrical pattern, looking like a bullish bias and a move to the upside. If we look to the 4-hour chart, is it an extended 5-wave pattern? I'm not sure, to be perfectly honest. What I do know is that we've got a bullish outside candle posted on the 4-hour chart, often indicates the end of a trend. If we break it down into very short time frames, again the scope for mild selling at the beginning of the week, maybe towards 127.20. And if we think about it, if we think about the reflection on euro dollar, the fact that we're expecting dips to be bought at the beginning of next week, if we think about the dollar yen trade setup, there's still scope for a move to the upside. Euro yen, really, we've got to be looking at buying dips off that symmetrical pattern. Okay, I hope that all makes sense. I hope it gives you some idea, at least of what we're looking at next week and what we're focusing on. Good luck with your trading, and we'll speak to you again next week. Okay, thank you very much. Bye.